Hello, everybody. Good morning. Bonds are up, rates are down, and oh boy, stock market's way, way down. And that's all because of the Chinese startup DeepSeek. So DeepSeek is a lower cost AI model challenging the current AI leaders like ChatGPT, GTP, OpenAI, gosh, I can't even talk today, and Microsoft's Copilot. You get the picture, right? And those AI models requires a lot of massive capital expenditures. DeepSeek's model uses less advanced GPUs and incorporates seasoned features that top the App Store charts in major markets and causing the stock market to be a flight to equity. And that's why what that means is that investors are moving their money from volatile stocks into the bond market because that's a safety place where they don't have to worry about their losing money there. And so as a result, funds are shifting from tech equities to a safe haven in the U.S. bond market. So for example, NVIDIA, and let me just kind of show you the chart here. Well, here's the chart showing the interest rates, the S&P 500, and you can see that it is way, way down here. And then here we've got NVIDIA is the biggest drop that they've ever had. And so it fell 11%, erasing hundreds of billions of shareholder value. The largest drop in history, and interest rates, obviously are falling because of that. The yield on the 10-year Treasury is down to 5.4%, and mortgage prices also are increasing, which is really good for the bond market. And so, just to kind of give you an idea of where interest rates are going right now, what we're seeing is that here you can see the 10-year Treasuries are down 7 bips, and that's broken below this very technical resistance line right here that you can see we've been in for the last 5 or 7 days here. And then we see that interest rates, from last week are finally down below 7%. And we expect rates to continue going down this week as well. And here's the bond market. So the bond market has a huge rally, has broken above this ceiling of resistance. Hopefully, we're going to still see some improvement there in the bond market as well. So right now, one of the things that have helped interest rates is the existing home sales for December came out last Friday. And there's only 2.2% change month over month on an annualized pace of 4.2 million units. And that's an increase of 9.3% year over year. And the median home price here is interesting. It's $404,000, which basically stayed the same. That's a 6% rise year over year. And inventory still continues to be really, really tight. And so right now what you're seeing is that there's not a lot of homes on the market. There's even less because the market was a little bit busier in December. Sold above list was 16%. First-time home buyers were 30%. And then you've got cash buyers at 28%, and then investors at 16%. So that all goes to help with keeping rates, I think still coming down. Also, new home sales signed contracts in December, which came out today, that also helped the bond market because it showed an annual increase of 3.6% month over month and 6.7% year over year. And basically what we see is that there was an increase here in December of for sale inventory of 490,000 homes versus 488 in November. And basically there's still just about a 2-month supply on the market. And what we're seeing is that most of the time we want to see somewhere a little bit higher inventory so that we can sell more homes, right? And as interest rates come down, you're going to see that it's going to be even tighter and tighter. So you want to get your application in now if you're thinking of buying in the spring or early summer. And you want to start looking now because the right home may jump up at you sooner than you expect. Today's mortgage market minute is brought to you by you don't need 20% down for a down payment. Most people still think that you need to have 20% down for a down payment to buy a home. Now, if you're a veteran, you only need 0%, right? Unless you've used your VA before, and I'm going to have a video out on that next. If you are going USDA, it's 0% down. If you're going to go FHA, it's 3.5% down. If you go conventional and you're a first-time home buyer, it's only 3% down. If you've got a current home and haven't and owned a home in the last 3 years, then you're going to have 5% down or 10 or 15. You don't need the full 20%. What you do find, especially with conventional, is that with less than 20%, you're going to have private mortgage insurance. But let me go over the options with you. In many cases, I can find you a really great deal, especially if you're a first-time home buyer, where interest rates are as low or lower than someone that puts 20% down, so that the monthly mortgage insurance isn't all that bad for you. Hey, if you've got any questions, I'm here to help. Don't hesitate to give me a call at 801-792-7777. Have a great week. We'll talk to you soon.